your paycheck goes after you receive it? Spoiler alert. Stick around and unlock the secrets of taxes. Hello, my name is Benelli Menisi, and today I have a very interesting topic at hand. Without wasting much time, our topic for today is found under individuals, fringe benefits, and allowance. We will be focusing on two aspects: right of use of vehicle vs travel allowance. Things we are going to doing today include explaining tax literacy and its importance for young people, tax implications for travel allowance, and right of use of vehicle. Explaining what is right of use of motor vehicle and what is a travel allowance. Explaining who is eligible and when it applies. Explaining how the tax values are calculated and its impact on taxable income. Pros and cons. Tips and advice. Let's dive in. Explain tax literacy and its importance. What is tax literacy? Refers to the understanding and knowledge we as individuals have about taxes, how taxes work, their responsibility, and the impact they have on personal and financial situations. So we turn to focus mostly on certain key aspects of tax, basics of taxation, understanding fundamental concepts of different types of taxes, income tax, property tax, and how it's calculated. Tax obligations, knowing what you need to file, including deadlines, required forms, and records to keep. Basically, the difference between filling statuses and the impact of exemptions and deductions. Impact on financial decisions. Understanding how taxes affect financial decisions and planning, such as investments, savings, and spending. Filing process. Know how to prepare and file tax returns, either through self-filing or using professional services, and understanding the implications of errors or omissions, legal and ethical considerations, being aware of tax laws and regulations, and understanding the importance of compliance and ethical behavior in tax matters. Tax benefits and credits, being aware of various tax credits and deductions that can reduce tax liability, such as education credits, mortgage interest deductions, and retirement account contributions. Why tax literacy is important? It is crucial for making sound financial decisions, avoiding costly errors, leveraging tax benefits, and achieving greater financial independence. Financial planning. Understanding how taxes affect income helps with budgeting and financial planning. Tax implications. Implications for travel allowance. Tax-free status. In many jurisdictions, travel allowances up to a certain limit are tax-free if they meet specific conditions, such as being used for work-related expenses. This can include mileage, fuel, or other travel-related costs. Impact on taxable income. When within the tax-free limit, a travel allowance does not impact taxable income. If the allowance exceeds the allowable tax-free amount, the excess amount is added to taxable income, increasing the overall tax liability. Documentation and reporting. Employees might be required to provide documents or receipts to prove that the allowance was used for business purposes. For the employer, the travel allowance is deductible as a business expense unless it is excessive or not properly justified. It might affect the deductibility. Implications for right of use of vehicle. Taxable benefit. The use of a company vehicle for personal purposes is often considered a taxable benefit. This means that the value of the personal use of the vehicle is added to the employee's taxable income. Calculation of taxable value. The taxable benefit is usually calculated based on a prescribed formula or a percentage of the vehicle's value. This might include annual lease cost. If the vehicle is leased, a portion of the lease cost attributed to personal use may be taxable. Car benefit. Formula. Some jurisdictions use a standard formula to calculate the benefit based on the car's value, type, and usage.
Right of use of motor vehicle. What is right of use of motor vehicle? Right of use. Motor vehicle is a company-provided car that employees can use for both business and personal purposes. Consideration less than value. 3 situations. The company typically covers costs such as maintenance, insurance, and fuel. Who is eligible and when it applies? 1. Eligibility. Typically, employees who are required to travel frequently for their job or hold senior positions may be eligible for a right-of-use vehicle. Companies may offer this benefit based on the employee's role, seniority, or the need for constant travel. 2. When it applies. This option is usually provided to employees whose work necessitates regular travel, such as sales representatives or executives. It can also be a perk for employees in higher-paying roles or those with significant responsibilities. Paragraph 7 of the 7th schedule deals with motor vehicle fringe benefits. The amount included in paragraph AI of the gross income definition in respect of a motor vehicle, the taxable benefit, is benefit equals value of private use minus consideration paid by the employee for use of the vehicle. Value of private use. Determined value of vehicle. Cost price. VAT inclusive. Employers who are vehicle dealers or manufacturers or rental companies. Value of private use differs in 3 situations. If owned, leased by employer. No maintenance plan, X 3.5% per month. Maintenance plan, X 3.25% per month. Operating lease for employer. Actual cost, plus fuel costs, excludes incidental private use, asset used mainly for business. We are going to have a quick example on the right use of motor vehicle. And what happens if an employee kept accurate records of business KMs? If employee has paid certain costs? Example 1.
Example. Fringe benefit on employer-provided motor vehicle. Mr. Zeus uses a company car which cost 500,000 rand, including VAT. For the 2024 year of assessment, during the whole of which Mr. Zeus used the car, he traveled 50,000 kilometers in total for the year, of which 26,000 kilometers were for business purposes. Mr. Zeus paid for the fuel relating to his private use of the motor car. This amounted to 40,000 rand for the year. He kept a logbook. Mr. Zeus has a salary of 80,000 rand per month. Calculate Mr. Zeus's taxable income for the 2024 year of assessment. Solution. Salary. 80,000 times 12. 960,000 rand. We will also calculate the monthly value of private use. 500,000 rand times 3.5%, since it has no maintenance plan, equals 17,500 rand. Then we calculate the annual value of private use. 17,500 rand times 12 equals 210,000 rand, less. Business use 210,000 times 26,000 kilometers, divided by 50,000 kilometers equals R 109,200, less fuel costs 24,000 kilometers times R 1.976, taken from the deemed costs table, equals R 47,424. Then we subtract R 109,200 plus the R 47,424 to get R 53,376. Taxable income is the sum of R 960,000 and R 53,376, which is R 1,913,652. 0.13376. The value of the fringe benefit is added to the gross income of the employee. Next, it's travel allowance. Next, we are going to look at travel allowance. A travel allowance is a fixed sum of money provided by an employer to cover employees' work-related travel expenses. It is intended to reimburse employees for the cost of transportation they incur while performing their job duties. Section 8(1)(b) deals with the travel allowance. There are two types of travel allowance. I, an allowance or advance in respect of transport expenses, and Andre, an allowance or advance to be used by the recipient for paying expenses in respect of a motor vehicle used by the recipient for business purposes, the so-called motor car travel allowance. Taxable portion in respect of allowance equals portion of travel allowance expended for private travel. First, you include the gross travel allowance in the taxable income. Then exclude the portion expended for business use. Business use calculation. Business use equals business kilometers times cost per kilometer. OR business use equals actual expenditure, who is eligible and when is it applied. Eligibility. Typically, employees who incur out-of-pocket expenses for business travel are eligible for travel allowances. This can include roles where employees travel frequently or need to use their own vehicle for work. When it applies, a travel allowance is generally provided when employees need to travel as part of their job but do not have access to a company vehicle. It is often used in roles where travel is necessary, but the company prefers not to provide a vehicle. Travel allowance, if given deemed costs, we use the following table, which changes each year. Given by SARS, we will look at an example for travel allowance. Example 1, Mr. Xavier earned a salary of 75,000 Rand per month during the 2024 year of assessment. He owns an Audi that cost him 650,000 Rand, inclusive of VAT, exclusive of finance charge. He was paid a travel allowance of 25,000 Rand per month for the whole tax year. He traveled 15,000 kilometers during the whole year, of which 9,000 kilometers were for business purposes per his logbook. Deemed costs per kilometer is 20 Rand 910 cents. Calculate his taxable income. Solution. Salary, 75,000 Rand times 12, 900,000 Rand travel allowance, 25,000 Rand times 12, 300,000 business kilometers, 9,000 kilometers, 9,000 deemed costs 20.910, 20.910 times 9,000 equals 188,190 Rand. 300,000 Rand minus 188,190 Rand equals 111,810 Rand. Taxable income is the sum of 900,000 Rand and 111,190 Rand, which is 1,011,810 Rand. Pros and cons for business and personal use. Pros: convenience being the main difference and benefit. As employees have a vehicle for both business and personal use, this can increase morale for employees. From the employer's point of view, they can choose when and how to maintain the vehicle to meet company and employee standards, ensuring safety and reliability. Cons: the employer can include the higher costs, as it could be significant. Examples are purchasing or leasing, insurance, and maintenance, while the administrative burden can be intense as there as many legal requirements involved too. For employees' pockets, the fringe benefit might be costly depending on cost and frequency of use, including a risk of misuse that can lead to a higher taxable income. Tips and advice. Keep an accurate record. Save receipts, any invoices for costs incurred during business trips, such as parking, fuel, and maintenance. Familiarizing yourself with SARS guidelines on travel allowance to ensure compliance and understanding which documents are necessary for tax purposes. Seek expert assistance, such as a tax consultant, to ensure correct taxable benefit calculations and compliance with SARS laws. Think about speaking with a tax specialist. Examine the company's rules. Internal guidelines make sure you are aware of and follow any internal corporate policies pertaining to the usage of company vehicles and the reporting of expenses. Just a quick overview of everything we spoke about. Tax literacy and its importance for young people. Explained tax implications for travel allowance and right of use of motor vehicle. And we looked at the right of use of motor vehicle and its calculations, how it affects the taxable income, and travel allowance and its calculation. Who is eligible and when does it apply? For more information, be sure to visit the SARS website and check their guidelines to ensure that you understand what is necessary for tax purposes. All right, folks, that's a wrap for today. If you enjoyed the ride, hit that like button, smash subscribe, and ring the bell so you don't miss out on any of the action. Drop a comment below and let me know what you think. Thanks for hanging out. Until next time, keep it awesome.